Market Update. I'm Gordon Toy, and joining me is Bill Keenan, General Manager of Direct Equities at Lonsec, to bring us the latest market developments. So the latest headline has been the flash crash for the pound sterling. What's been going on there?
Yes, there's been about a 10% fall in the pound in the recent past week. It fell below $1.17 and it's now settled around $1.20. Seems to be related to Britain officially looking to implement Article 50 by March 17, where they'll be looking to exit the Eurozone. So I guess that's becoming more of a reality. But during the year, the pound's actually been drifting lower from $1.60 to around $1.20 presently, which is about a 25% depreciation versus US dollar, which is a fair depreciation. The irony is that the fall in the British pound is actually good news for the British economy. It makes their exporters more competitive. And in fact, we've seen the FTSE move to near record levels above 7,000.
And we've seen oil and gold moving in different directions again. What's been driving that divergence?
Yes, in the past, oil and gold used to actually move together, and recently we've seen them move in opposite directions, which is a bit strange, but the fundamentals have been a bit different for each. So with oil, OPEC has come out and said that they're looking to limit oil production to around 32.5 to 33 million barrels at the November meeting. Now, that's not a big cut, but it's enough for the, I guess, the oil market to cover shorts, and there's been a bit of a rally in the oil price above $50 to around $51 at the moment. We're not sure it's sustainable, but it's enough for there to be a bit of a rally. With gold, it's actually been talk about interest rates rising in the US and the US dollars being gradually rising this year, as I mentioned before, and that's generally bad news for the gold price. So after holding 1320 for most of this year, it's just started to move down to a lower level at 1240 in the recent month or so.
And turning to the US now, a busy week ahead.
Yeah, as we run into Christmas, we're looking at US reporting season coming up for the September quarter. Now, the market's only expecting a slight decrease in earnings, but if you strip out the mining and energy sector, which is pretty tough at the moment, we're expecting low to mid single digit growth, and usually the companies come in a bit ahead of expectations. So it shouldn't be too bad, reporting season. Then after that, we've got the US election, November 8th. So that's the big one where at this stage, it looks like Clinton and the Democrats are just starting to pull ahead, which will probably be viewed as a positive for Wall Street, given that Trump seems to be a bit more of an unknown. And then lastly, as we head into December, it's the final Fed meeting for the year, where there's still expectations that the Fed could increase rates. We're down to the last meeting of the year for that sort of decision, but I'm sceptical myself because the last payrolls report that came out was about 156,000. It was a bit below expectations and there was some negative revisions. So it looks like there's not quite enough there for the Fed. And they would be a little bit worried about the US dollar just creeping up over the last 6 months and the pound weakness, that if they increase rates, they're probably going to have further strength in the US dollar. So I think overall it's unlikely that they're going to increase rates in 2016.
And finally, what's the overall outlook?
Well, Lonsec as a house, I mean, it's quite uncertain, the outlook at the moment. Clearly, Australia and the US doesn't look too bad, but there's some big risks in Europe and Asia. I think overall we're remaining underweight equities at the moment, but we do recognise that, you know, volatility is low and there's this key election coming up in the US. We're looking for any sort of increase in volatility or weakness in the market as an opportunity to increase our weightings in equities at this stage.
Bill, thanks for sharing your insights. That's it for the October market update. Make sure you tune in next month. As usual, for better investment outcomes, visit lonsec.com.au.